Robinhood. Take charge of your trades with Robinhood's powerful new free desktop trading platform, Robinhood Legend. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. Tuesday, March 18th, a little after 11 a.m. on the East Coast. We are late because of me. My mouse was dead. No, that's not a metaphor. My actual frickin' mouse, this thing, died. So I had to wait for it to recharge before I could log back in because I don't know how to do it without a mouse, but I don't think anybody particularly cares. Market call. It's not Wednesday, so it's no Butters bitch. It's just me and Dan. How are you?
I'm doing great, guy. You were impaling yourself, as you like to say, with technology. Usually it's software technology that gets all up in your craw, but this time it was the
actual they call that a hardware, right?
Hardware. A lot going on today, man. I mean, like, you know, sometimes we'll say, it's kind of not so interesting of a day. This is an interesting day among many interesting days. If you just kind of think back over the last week or so, the headline is that tech stocks swoon. This would be, I don't know, I saw it somewhere, you know, thwarting the rally. Okay. And we're going to go over some quick levels. You and I are going to do a little preview of tomorrow's Fed meeting and presser.
The all-important Fed meeting. Oh, that's
no, that's the all-important jobs report. We're not going to get that until the first Friday of April, looking back on March jobs, guy. But you and I have differing views as it relates to yields, and we're going to demonstrate a couple trade ideas in which to reflect those moves, and we're going to kind of go through a little bit what you think and what I think the Fed Chair Powell's going to say.
Wow, that's a tease. That's nicely. Now you get locked people in, and swoon is a great word. The summer swoon that Met fans typically feel. We're ways away from that, but it's inevitable, like most things are. But it is an interesting day, and you know, let's put up the S&P chart. Excuse me, because I think this sort of tells it all. Last week, we were saying to expect a counter trend rally, and it's going to be violent. We saw it. I thought it could trade back up to the 200-day moving average. It didn't. The question now is, was that rally enough to sort of be a continuation of this sell-off, or, you know, is there more to go on the upside? So I think that's what people are sort of struggling with. So today, obviously, I think the question is being answered on the downside, but as you said, there's a lot of real estate left in today, and with the Fed tomorrow, who the hell knows? But, you know, the market is behaving in a way that, and I'm not going to say I thought it would, because that's, you know, that sounds disingenuous, but it sort of makes sense to me. Again, when you have vol at these levels, you're going to see violent moves up and down, and today's the downside of the equation.
Yeah, so in Sunday night's risk reversal newsletter, our main man, CC Lagater, kind of detailed what the implied movement was in the S&P 500 for the week, which includes, you know, a bunch of earnings, a bunch of, you know, economic data. We have the Nvidia thing tonight after the close, and obviously the Fed meeting. It was about 2.2% in either direction, which was, the range was 5,500 to about 5,750 or something like that. And we had already had a big part of that move on Monday. You see this kind of 5-day chart here. You see that gap that we had, you know, yesterday morning or Friday morning, excuse me, and the continuation. You see the gap lower. Gaps in the indices are really important. It happens all the time in stocks based on news, but, you know, to have them in the indices, they're probably more important levels, guy. I don't know if you'd agree with that, but, you know, the one thing, and I had Marco Kolanovic on the Risk Reversal pod. It dropped this morning in your podcast feed. If you're not following it, go to your podcast store and follow it. Marco is the former market strategist at JP Morgan. Great conversation. We spent more time, guy, on macro and geopolitics than I thought we might. But today the headlines are: overnight, Israel breaks the ceasefire in Gaza and they start bombing again. And then this kind of, you know, Putin Trump call today, you know, hopefully in, you know, with some sort of agreement towards a ceasefire there. But some of the things that Putin is suggesting are not likely things that we are willing to do. So I think this has something to do with it, guy, like the geopolitics stuff.
No, listen, I think the Israeli headlines clearly are weighing on the market. I don't want to be crass, but it's not particularly surprising to me that, you know, tensions continue to be elevated there. You know, I thought that ceasefire wouldn't last as long as it did, quite frankly, but here we are. So clearly geopolitics are still playing into it. And who knows what's going to happen with this Putin-Trump call. I think it actually starts at 11 a.m., so maybe it's underway now. Yeah. So we'll see. And listen, an hour and a half, 2 hours from now, I mean, there could be some announcement that all three sides being Ukraine, Russia, and the United States, have come to this agreement, and the market might sort of champion that, and we could be unchanged by 3 o'clock this afternoon. That's not out of the realm of possibility. But to your point, geopolitics are clearly playing in. But the other thing that's playing in, and we're going to spend a little bit of time on this because, as you teased earlier, yields are a big story. So let's put up this TLT chart. Amanda sort of drew up some levels and channels and what have you, and here we are. And we've obviously been seeing the TLT in this uptrend since earlier this year, meaning rates have been going lower. We had a move up to the 200-day moving average, seemingly failed, which makes sense to me. We have a flattening moving average, which basically says, the market is sort of undecided here, which also makes sense. I think a lot of what's going to happen, in my opinion, is going to be predicated on what happens with the bond market.
Yeah, so let's go to the 10-year yield here for a second, because obviously, the TLT is the 20-year Treasury yield ETF. But looking at, let's go back here. There we go. That's the 10-year yield. It's over 5 years here, and the horizontal line. Let's just focus on that, because Guy, you just mentioned the flattening 200-day moving average in the TLT. You see that here in the 10-year yield, right? It's been a little bit more volatile, but where we are right now at 4.3% is exactly where we were at the highs in 2022. Carter Braxton Worth has been bringing this up. You see the range there. We overshoot up to 5%. We come down, to 3.5% or something like that. We're in the middle part of that range. I see that uptrend, Guy, from kind of late 21. Is it that important of an uptrend? Maybe not. It looks like a bit of a head and shoulders. It just depends how you're looking at it. You see that resistance, not particularly interesting. But again, the 10-year yield stuck here. Now let's go to the longer term chart of the TLT. You've been highlighting this downtrend. You've been highlighting the support in the TLT. If you think that the TLT is going to break to the upside, that means yields are going lower. If you think that the TLT is going to break to the downside, that makes you think that yields are going higher. So let's talk about it. Tomorrow, Fed meeting. The last one we had, Guy, I think the Fed Chair Powell had this sort of what they called a hawkish pause, right? They're kind of wait and see about inflation. They felt like they've made a lot of progress, but they also see some sort of things that could suggest that maybe, it hasn't stopped going down or going up, and it's not going as fast as they would like to their 2% target. So look at that. That's the CME Fed Funds futures. It's basically suggesting 0% probability of a cut at tomorrow's meeting. So let's talk about it. What do you think is going to happen let's just talk about this. We just mentioned geopolitics, right? We just mentioned, well, we haven't talked about it yet, but the trade war and the sort of uncertainty that poses to economic growth and the like here. So how do you think the Fed walks the line? Because a lot of folks thought that the rate cuts that they did back in the fall were somewhat political in front of the election. I don't think they were, but the Fed chair is going to get a lot of pressure, in my opinion, no matter what happens from the White House.
Yeah, no, without question. And, we've talked about this, and there's always going to be political, especially with this administration. They're going to put the heat on, as they did in the first Trump administration, 2016 through 2020. Now, that was, by the way, Fed Powell's early tenure as the Fed chair. And I think he did acquiesce to the jawboning that he got seemingly on a daily basis from the administration, and the market sort of broke him as well. Again, I don't know this to be true. This is just my thought. I think in retrospect, he's probably disappointed in himself that he didn't seemingly hold firmer and didn't bow to the pressures of the market and the administration, but it's really neither here nor there. But I also think that he's a lot longer into this term, and I think he sort of understands how to navigate it a lot better. So this is just me. I don't think he's necessarily going to succumb to the pressure of either the market going lower or this administration basically telling him that yields need to be lower. I think he's going to look at the data and act accordingly. Now, you can then say, well, the data suggests that things are softening. I mean, some of these ISM numbers, the manufacturing numbers, have not been good. If you start to see unemployment tick meaningfully higher, then obviously people will say they're behind the curve and they need to lower rates, which may in fact be true. I don't know necessarily that they're going to change the language or the tenor or the tone tomorrow, but the market will interpret what it wants to. With all that said, I'm of the belief that they could actually say they're going to lower rates, and it doesn't necessarily or won't necessarily have an impact on the TLT, which sounds completely counterintuitive. But, I think the TLT is its own animal right now. So I think the market has learned that, the Fed can do what they want in the front end of the curve, but we have issues in terms of the debt to GDP and other structural issues that actually suggest that yields can go meaningfully higher. And I've been in that camp for a while. I looked really smart in that camp for a while. I looked really dumb in that camp for a while. And now it's sort of a bit of a coin flip here.
Yeah. So one of the main reasons why I disagree with that guy is that if you go back to that first 50 basis point cut that we had in September, the Fed clearly said that they were worried about the jobs market, right? And they're worried about what that would mean for the economy. And therefore they did what they always do. They lower interest rates. Like, that is the main thing. And I agree with you. You've been right about the fact that when the Fed has made some moves or they've tried to jawbone certain things, the 10-year yield hasn't always done what they suspected. But let's assume that we want to take Treasury Secretary Bessent at his word that they are targeting the 10-year.
Mm-hmm.
Let's just say that, some of the data that we saw, CPI, PPI, it was not hot. It wasn't cold, but maybe it suggests that we're kind of at a spot here. Let's just say that some of the economic weakness that might have been percolating a little bit because of the fear of the trade war works its way into the economy. Now, you can make a whole host of arguments why that might be inflationary, but Tom Lee on our podcast of Fundstrat a few weeks ago suggested that the trade war tariffs might be actually deflationary, right? So if you have a weakening comment, so I just kind of feel like on a whole host of kind of qualitative reasons why yields go lower in the near term. And I look at that TLT technical setup and I want to play it for a breakout. So here's what I want to do. I want to use options. I want to define my risk. I want to kind of think about how this thing might get back towards those prior highs through that 200-day moving average. Maybe I'm targeting something in the high 90s. Maybe it looks like 100. So I want to look out again to April expiration. Today, when the ETF was trading at 90.35, I want to look at the 91 call. And if Amanda will let me drive, I'm going to go over to the legend here, and I'll show you a little bit about what I am looking at on the system here. So if we bring up my main page here, here's the TLT. I can use my cursor because I have a mouse guide that works on
mine works now too.
And I can just kind of see what I'm doing here. I'm just kind of moving this thing. I can also go down low and I can make this a 1 year, right? So here's what I'm looking at. You can see that uptrend that Amanda drew. And here's that 5 year. You can see where that downtrend comes in, the longer term one. So now I'm going to go to the options chain here and I'm going to navigate this. You see all the expiries that are on the left here. So I'm going to go to the April 17th. That's the third Friday of April. But actually, Guy, it's not a Friday. It's a Thursday because the 18th is
Good Friday.
There you go. That's Easter weekend. So just to navigate this, you see the options chain, you see where the current price is down there. So I go and I hit 90.33. That's where it's trading. So I'm going to look at that 91 call in April. I can just click on that, right? And let's just say I want to buy, I don't know, a 10 lot. It's this easy, right? I just navigated right there. The offer is at 121. Because the spread is so tight, Guy, it's 120 at 122 or so. I'm just going to pay the offer here. I don't really want to mess around. Oftentimes, if you have a very wide spread, you might kind of go in there and you might kind of bid mid-market or offer mid-market, that sort of thing, and see how the underlying is moving, and you might get it there. But in this case, I just kind of want to take the offer here. And so if I look at it again, I can just double click on that. I get 122. I'm going to buy a 10 lot here. Bang, bang, bang. There's the 10. So I just bought that. You see how it just told me that I was submitted. I was partially filled. Now I'm executed. And that's going to pop up in my positions there. So if I paid 122 for this guy, my break even is the strike plus the premium that I paid. So my break even now is at 92.22. If you think of that, it's 1.4% of the underlying. I have about a month for that to play out. I have a bunch of events in there. So I like playing for upside in the TLT, which would mean downside in yields. So talk to me about what you're seeing here, Guy Adami.
And you have a month, and this is probably you're going to be right or wrong a lot sooner than that. So it makes sense. And listen, there are most people that sort of in your camp, and there are very logical reasons to believe that rates are going to continue or start to reaccelerate to the downside. I shouldn't say continue because they've been somewhat volatile. So it makes sense. And as you also said, Treasury Secretary Bessent has made it clear that they're targeting 10-year yields. Now, how they target that, I think, is what the market is trying to come to grips with. Because quite frankly, if the stock market continues to sell off, they're going to get the lower yields that they want. They might not be happy about it, but that's what's going to, in fact, happen. They will get yields lower on the back of some perceived flight to quality. So there are a lot of reasons that this trade could work, and it makes a lot of sense. Flip side of the coin, are some of the things that I've been talking about. Obviously, a lot of issuances have to be put forth over the next few months. It's not to suggest they're going to be failed auctions. That's not what I'm saying, but I think the market's going to demand a higher rate of interest to buy our debt. There are obviously things going on overseas that have impact on that as well. And I still think there's some inflationary concerns out there, as we've seen with the last few CPI and PPI prints. Despite the fact that people say they're softening, the reality is 4 years into this thing, inflation is still a problem. So you think you throw all those things in the bucket, and you can make the counter argument that, yields are going to start to accelerate higher. And a lot of it predicated on issuance, and a lot of predicated on the debt problem that I think we have. So the flip side of the coin is those little double bottoms that we traded down to and bounced off of. There's a relatively good chance that we take them out. And I think they came in the form of like 82 and change or so in the TLT. Now, you're not buying out of the money puts, deep out of the money puts on that, because they're a bit of a lottery ticket, but you can play it a different way. So if you're in Dan's camp, we sort of outlined the trade to think yields are going lower, TLT is going higher. Well, if you're in the Guy Adami camp and think yields are going higher and TLT is going lower, this is how you do it, Dan.
Yeah, so let's just think about this in April. And I want to key on something here, Guy, that you said in a second here about timeframes, because that's really important. We talk about timeframes all the time when it comes to trading, especially with options. Obviously, it's really important. You got to get a lot of things right if you're playing long premium directional, right? You have to get the time frame correct. You have to get the direction and then the magnitude of the move, right? So, we're just going to use the April as an example. Obviously, I executed the trade on the call side, but if you're looking at this versus 90-35 and you're looking at the 90 put with the stock or the ETF trading around again 90-35, so it's just slightly out of the money. That, and if I can take the reins here on the legend again, I'm going to go to the same expiry here. You look in the middle there, it says 90-34. You see that kind of 90 put. It's offered. It's 129 at 131. Again, there's 2 cents is the spread. That was no different than the call. And if you were just going to take the offer, it's 131. Let's call it 130. Okay, so now let's go back to the payout diagram that Amanda mocked up here. So if you're paying 130 for this put, you have a break even down at 88.70. You can lose up to 130 between 88.70 and 90, and it's a max loss above $90 here. And when you think about this, the risk reward, it looks very similar, right, to that of the call purchase. So guys going one way, I'm going the other way. Go in the chat. We'd love to hear from you what you guys think the direction of the TLT and thus yields are into tomorrow's Fed meeting. But, again, I'll just say this about duration, Guy. I'm playing, to your point, I think we could get a move tomorrow. Okay. Your view is a bit longer as it relates to issuance and the like, and some of the things that we're going to see with the trade war and inflation and the like. And so therefore, rather than just buying an outright at the money call or put or very near the money, if you were going to take, let's say, a view out to May expiration, which will incorporate the next Fed meeting, then you might look to do a put spread. Guy was talking to the downside about 82, 80, that's that double bottom. Maybe you'd look at the 80, 90 or the 90, 82 put spread or something like that, which gives you more time. And thus you'll have more premium in that downside put that you sold. So again, Guy, time frames, talk to me a little bit about how you're thinking about my trade versus your trade.
Well, I think in terms of your trade, as I said, you're going to know, I think, pretty quickly within the next week or so. I think in terms of my view, it might sort of play out a little bit longer, but that's why you give yourself the time that you do. And, it is time horizons, and it is sometimes you have to leg into things. Sometimes you have to actually take a directional bet. But as you say all the time, when you put on these trades, you sort of have to know where your out is. And you've always said that if you're out half the premium, in other words, if you bought something for $1 and it's now trading 50 cents, you pretty much have to cut and run. And on the flip side of that coin, if you buy something for $1 and it quickly goes to $2, the prudent thing to do is take at least half off, and then you're in the trade for free. So you also have to have some parameters around the trade once you put it on.
Well, we really surrounded that trade, Guy. I think we probably spent more time on the 10-year U.S. Treasury yield, or at least ways in which to trade it, than we've done in a very long time. Before we get to some of the tech stuff, because I think you and I, other than the Fed, think that Nvidia, Jensen Huang's keynote tonight at GTC, that's their user conference, is going to be really important. But let's look back on a trade that we detailed on March 4th. It was in Visa. And, we were looking for opportunities to kind of sell what we thought was a pretty, just uncharacteristic sort of rally in the face of a broader stock market that was selling off. So this was on March 4th. The stock was trading at 354. We detailed buying the April 350 300 put spread. It cost about $8. So today at March 18th, you can sell that for a double. Basically, like you just described, Guy, how we manage risk to the downside. We look to take half off if it's going against us on long premium directional trades. But if we get it right, to the, like in this case, to the downside, we also want to take a profit if you have a double. So let me just kind of mock this up and show you how you might do this. So if we're buying the put spread back on March 4th, we're buying the near the money put, that's the 350, and we're selling the 30 put way downside. Okay, so if you're going to take a profit in this trade, then you have to do the opposite, right? So let me just pull up on the options change here, or on the options chain, the trade. This is going to Visa, and this was April expiration. I'm going to drive on the legend here for a second. There it is right there. So if I bought the 350 put in April, and so look at, I use my cursor and I just scroll down. Okay, if I bought it, now I'm going to sell it. It's bid here at 1990, or it's offered here at 1995. So if I'm going to sell a long one here, I'm going to look at the bid. So that's 360. So the spread is 1860 at 1985. That's really wide. That gives you an example of the sort of situation where you're going to want to get in mid-market. So if I sold the way downside on March 4th to buy that back, right, I'm going to take the offer here. So right now, if you think about that, if I were to close that out, it's about $18. We paid $8. It's a little more than double with the stock at 333. That's a nice little trade, especially for a stock that near term might look oversold. Guy, thoughts on how we traded the Visa here?
That's exactly, I mean, spot on. I mean, think about how quickly it worked. I mean, we had thoughts of what could potentially happen. You know, we talked about the potential slowdown in spending in the consumer and how that would affect transactions. And obviously, Visa and MasterCard are not impervious to that. By the way, it's also playing out in American Express and Capital One. Not that we need to sort of throw those charts up, but there's clearly deterioration going on around very consumer-sensitive names. So that trade made a lot of sense. And, you know, again, a lot of people say, you know what, ride this horse, continue. But, you know, you have to move your feet too. So when you have a double, as we've said now 3 or 4 times, it's incumbent upon you to do something. And whatever that something is, you could take the entire thing off, say check change and move on. You could take half off and be in the rest for free. You could take a portion off and roll. I mean, there are a lot of different things you do, but to sit there and watch the screen is not one of them.
Yeah, I like the idea of taking half off. We talk about that a lot. All right, let's go to the other main event this week. It's Nvidia. And, you know, so Jensen Huang, you know, they just reported, Guy, and we talked about this last night on Fast Money, which I thought was kind of an interesting conversation, because some of the ideas that we're going around the horn, what do you expect to hear? I don't expect to hear much more than what they just said in their conference call and when Jensen Huang was doing the rounds in the media afterwards. Now, might they have saved a little something, you know what I mean, for GTC? Possibly, but they've laid out this roadmap. You know, the stock, by the way, and we've mentioned it on a gazillion occasions over the last 6 months, had really been going sideways, right? So they've kind of mapped out the roadmap here. So talk to me a little bit about what you think, and I can talk a little bit about what the market's expecting. But like, again, my expectations are not pretty high. And you could say, okay, well, that makes it good because there's a chance that they get over that low bar and then investors get excited again.
He's speaking to obviously a friendly audience, right? People are excited to be there, which I totally get. You know, he's become this generation's, in some ways, maybe even as Steve Jobs, if I may be so bold. I mean, he clearly has captured the imagination of a lot of people. Fantastic. Good for him. In terms of what they can say differently, I'm hard pressed to believe there's a lot they can say that's going to sort of move the needle. They can sort of double down if it comes up on the reacceleration of margins in the back half of this year. Again, the margin deterioration is something that they anticipated, and I think the market did. What I didn't necessarily anticipate was sort of this statement that, yeah, but we will see a return to normal levels, or at least their normal levels in the back half. I mean, they're buying themselves some time. I do not think that's going to happen, but, you know, it doesn't mean that I'm right. So in terms of the stock, you've just said it. I mean, you go say what you want, but since that engulfing pattern back in January, the stock has not traded particularly well. A week and a half or so ago, we thought you might have gotten down to a tradable bottom level in the short term. That proved to be correct. I was hoping it would bounce to the 200-day moving average. It did not. Doesn't mean it can't still, but you're obviously now seeing this sell-off, you know, this reacceleration, not reacceleration, but this renewal of the sell-off lower. And I think this is a challenge stock for a myriad of different reasons. Again, it's not an indictment on the company. It's an indictment on some of the metrics that we've talked about.
Yeah, so it's interesting, Guy, that we talked about the history of the movement into GTC by Nvidia, and I think in the week leading up to it is about 7% or so on average over the last 5 years, and then the 2 weeks after about 4.5%. So all gains here. So the stock did have that 17% run off the lows last week, and here it's giving it some of it back. Let me drive the legend here for a second, because I just want to show what expectations are as far as the options market is concerned. They don't seem to be in line with what I think the expectations from a qualitative standpoint, what's going to come out of it. So the stock is trading at 116.83 right now. You can see that, right? You see that right in the middle. So if I were to go to the weekly, okay, so this is March 21st. Okay, we have 3 days until Friday's expiration. I'm going to look at the at the money straddle, right? So the 117 call is offered at 340. The 170 put is offered at 350. That gets you about 686. If I were to take that straddle, the 686 in premium, and divide by the strike, I get nearly 6% in either direction, Guy, between now and Friday's close. That is not an insignificant move when you think about how much the stock has rallied and then kind of given up over the last couple of days. So that surprises me a little bit.
Yeah, it may listen, but again, I mean, it's not like it's unprecedented or we haven't seen it before. So I also think there are a lot of people waiting in the wings to see, okay, am I going to get my shot here? And if in fact they say the things that I'm looking to hear, are we setting up for a move through that 153 level? And if so, dollar 50 cents or a dollar in the stock is not going to matter, which I'm sure there's that school of thought. There's still a lot of people that are very excited. There are other people that I think are potentially looking to continue to press what's been a successful bearish bet, which is, one of the reasons I think we're vacillating here. And I think also one of the reasons why the volatility is so high, because this potentially could be pretty binary, and it could sort of set the tone for the next couple months.
No doubt about it. Amanda, can you throw up that Fateful Eight little diagram that we had right there? So, Guy, one of the things when we look at this, we don't really have.
Maybe you should, on a day like today, Amanda could have said, Dan's Fateful Eight has become Dan's, wait for it, Frightful Eight. If we look at some of the metrics around these names, Dan,
I like that, and I'm surprised that no one kind of picked up this Fateful Eight. Remember, I'm just going to give us the we here on Fast Money. I want to say a few months ago, everyone's Mag 7, Mag 7, Mag 7. I'm like, nah, this was in December, right? When Broadcom made it above that $1 trillion level, and it added that club, and all these names had $1 trillion market caps. Tesla had gone there. And I basically was saying the fate of the market is in these 8 stocks' hands. And, it's kind of true. Okay. So when you think about what's going on in a day like today, they are clearly leading to the downside. Look at those sorts of moves. I mean, those are big moves for $1 trillion-ish sort of companies, or multiple. But, I think you brought this up earlier, this Meta move, this was the love story among the Fateful Eight. It was like, there was nothing better going on as it related to generative AI than this story, the best pure play or so. So let's pull up the chart, because, Guy, it made it into our chart of the day. I think you coined this Meta's moment of truth.
I don't think it was. That's Amanda.
Talk to me what you're seeing here, because this is maybe a little bit of a hungry alligator. I'm not sure. You see that blue line, it's the 200-day moving average. You see that breakout level, which was also support going back a few months here. Kind of a big level here, guys.
There was no bounce off that trend line, which I think, I shouldn't say that. It bounced for about a day and a half or so, and then obviously we continued the journey lower. You don't typically see a move that's been that fast and then re-accelerated lower. So here we are at the 200-day moving average, which I think is a good thing. Can you overshoot it? Yeah, anything's possible in this environment. You can go back to those prior highs, and then that prior high, and then subsequently the low that we bounced off of. So past resistance becomes support, past support becomes resistance, the whole thing. So we'll see. That comes in around probably 558 or so. You see where we're trading now. But it is a moment of truth. And, for those waiting for the pullback in Facebook, well, you got it here in spades. And if you believe in the Facebook story, nothing has really changed other than the direction of the stock. But with all that said, and I think you would agree with this, don't think for a minute that Facebook is somehow immune from a broader market, or economy that's slowing down. Because if in fact the economy slows down, ad spend could slow down in a pretty meaningful way, especially when you talk about a company that's not somewhat reliant, pretty reliant on small and medium-sized businesses.
Yeah, no doubt. Let's just for 1 second before we move on to Micron that reports after the close tonight. Let's go back to that Fateful Eight for a second, and just think
By the
about
way,
guys.
Dan, hold on. This is important because you're going to be
Yeah,
happy about this.
yeah.
Amanda, I'm reading, polling the audience and those who voted so far, like Fateful Eight, better than Mag 7. So look at you.
Thank you, people. And again, we appreciate you being here. So thanks very much. But when you're looking at the year to date here, Guy, this is pretty fascinating, right? So Meta just went down on the year. Look at how much those stocks, like across the board, are down. This was the leadership of the entire bull market for the last 2 years. They're all down 20% from their highs, even Meta. Okay, Apple's down about 18 or so percent, but give it another day or so and it'll be down there. Okay, so when you think about that, and it takes us back to 2021 when we were thinking about under the hood, where was the weakness? And it wasn't the S&P in 2022 made a new all-time high the first week of January, and then found itself by, let's say, late October down 25% or so. But many of these stocks were down a lot more than the 25% in the S&P or the 37%. Tesla, Meta, I'm going to throw in Netflix there, and I'm missing one other. Nvidia, they were all down 70% at their lows. I'm not saying that's going to happen again, but why couldn't it? Why couldn't any of these stocks be cut in half if the NASDAQ's down 40% or so? And the fact that no one could see it over the last few months is actually the very reason why it's potentially on the table here, Guy.
Yeah, the numbers don't lie. I mean, here you go. You see, Tesla leading the pack here, but these other names obviously have had pretty significant declines. And the one that sticks out to me, and I continue to harp on this, is Microsoft. And be like, wait a second, it's only down 9%. Yeah, but look at where this stock was again. I mean, this is now almost a year of underperformance. I mean, this was July of last year. The stock made an all-time high. And think about what it's done since. I mean, not particularly impressive. And now a moving average, it's clearly sloping lower. So there's been a change in direction in one of the most important companies in the world. And you can say, well, it's not that. Well, something's clearly going on here. So the market has sniffed out something with Microsoft, and now they're sniffing it out in some of these other names as well. A few months later, but still, the whole thing seems to be turning in a pretty meaningful way.
Yeah. Also turning.
We do have a question from Eric Metcalf, who's here every day, and this goes to a slide that we do have. So it speaks to this recent purchase. After Google's purchase of Wiz, which is not a particularly good name for a myriad of different reasons, are we waiting for a precipitous, see what he did there? That's me, downward move before pulling the trigger on a purchase? Weekly gap is 143.5 or thereabouts.
Yeah, so full disclosure, I'm good friends with the president, CFO of this company. Obviously, I had no knowledge of anything going on. This was a deal that was rumored back in the summer. They supposedly had turned down a $23 billion deal that was widely reported, CNBC, Wall Street Journal. So the fact that this deal is happening now is pretty interesting. We've been seeing these valuations in the private market, whether it be cyber, whether it be AI, there's a mix of all this sort of stuff, just skip up. So if you said to yourself, wait, 7-8 months ago, this was a $23 billion deal on the table. Now it's 32. I remind you, go look at Anthropic, go look at Cohere, go look at OpenAI, and I could give you 10 others, Perplexity, that they've been skipping up higher in valuation. This is Google's largest deal ever. I think it comes at a really interesting time for them based on what I'm reading to integrate this technology, cross-sell it among their cloud customers is hopefully going to give them an edge as they're competing with Microsoft Azure or Amazon AWS. So I have a lot more to read about this deal. I'd love to hear the executives. This is an Israeli company. The CEO is supposedly a really great Israeli entrepreneur. He's sold a company before. So one of the sticking points, Guy, was whether that Wiz was going to continue to keep their name and operate as a separate entity. I haven't seen one way or another whether that's the case. But to Eric's point, the stock has nearly round-tripped much of this last year's move. This is one of the ones on valuation that people feel really good about. Are they a little disappointed in some of the models, whether it was initially the rollout of Bard and Gemini and all that sort of stuff? And what does it mean for their search business? They started doing these search overlays. We'll all see. But this is, to me, one of the things that maybe investors are shooting first and willing to ask questions later. But as we hear them articulate what this could mean for the gains that they might make in cloud infrastructure or cloud market share, that's going to be a big part of the story, Guy.
We have two questions around the gold market, one from John and one from Tim. We can put them both up, but they're basically the same thing. I think John is saying gold sits sort of the top end of a channel. What now? And then Tim is saying, when will GDX catch up to gold? So GDX actually is starting to perform. I think it's the highest level we've seen now in a couple of years, if I'm not mistaken. We just traded through the levels we saw in August of 2020. I think the next level probably is about 53 and change, which was something we saw in the fall of 2012, believe it or not. So, yeah, I think GDX can continue its move. And I know a lot of people are saying gold's going to run out of steam here. It doesn't really show any signs to me of running out of steam. And if, in fact, we're at the top end of the channel, what we've seen before is sort of a slight pullback over the course of a few trading sessions and then a reacceleration higher. So I'm still a huge believer in the gold market. More and more people are starting to talk about it. Some for the right reasons, some from the wrong reasons. It doesn't matter. Gold is clearly in play. So to answer both questions, will the commodity take a pause here? Maybe. But I think GDX definitely has some more room to the upside, Dan.
All right, last thing before we get out of here, we got to look at Micron reports after the close tonight. And this is, again, an interesting one because we just detailed the Fateful Eight. Many of those names have been driven by, excitement around generative AI or the build out of data centers that are, used obviously to train all these different models. This is a one-year chart. And you see where the support is, it's pretty obvious. You see that where the resistance is, it's pretty obvious. You see that 200-day moving average, which the stock has basically been rejected at almost every single time. The implied move in the options market, Guy, is about 10%. So let's just think about this. So Micron is the memory, right, that goes into the servers along with Nvidia's GPUs and other processors there that go into the data centers, right, that power the models. So let's just pull up Dell for a second. So this is a server maker. When they reported a few weeks ago, people were unimpressed with the results despite data center being better than expected, and they were unimpressed with the guidance. When all of the hyperscalers before that reported, folks were not particularly happy about their revenue growth there. When Nvidia reported last week or 2 weeks ago, people were not excited about their guidance and their results, despite being very good. So I don't know how Micron, and you can talk about the commoditization and the like here, I don't know how people could get particularly excited about the results that they're going to print and the guidance that they're likely to give here. Because, Guy, this one, especially on a technical basis, looks like it has the potential to at least go back down towards that support at the lower end of the 1 year.
So I think Micron's Thursday. I don't know if you said tomorrow or not, but it's
Thursday after.
No, but that's fine. I mean, it is what it is. So Thursday, Micron reports number one. Number two, I mean, this chart speaks for itself. Every time we've traded up to the 200-day moving average, we failed, and we're here now. So it stands to reason that the same thing is going to happen. If you want to play Micron for a breakout, as Dan would say, have at it, given some of those lows that we made. I am not of that camp, and if it's 112 on Friday, which we've seen that movie before, I'll be the first one to say either on Friday or on Monday, got it wrong. But, I think to Dan's point, the enthusiasm around the space is seemingly waning. And we have learned the hard way over the years that as much as people want to say Micron has made this secular shift and it's no longer cyclical, trust me when I tell you, it's an extraordinarily cyclical company. So just be aware.
All right, man. Well, we covered a lot of ground today. I think
but we have to tell people something, Dan. This is from Amanda. At the end of the show, remind people that Market Call is becoming video only soon, no audio. I'm just reading what Amanda tells me. So it makes sense because this is a visual show.
Yep.
So for a visual show, we thought that video only made a lot of sense. Is that an accurate assessment?
Yeah, no, and YouTube has been a great growth engine for us. We have over 100,000 subscribers. So if you're
109 last that I looked.
Awesome. So if you're watching this and you're not subscribed, please do. You can set alerts when this comes on Monday through Thursday at 11 a.m. And if you're listening to this, then go to the YouTube and subscribe. Because again, if you just look at what we did today, we used the Robinhood Legend. We used charts there. We looked at the options chain. We executed a trade. We did a whole host of things. And when we just detail the payout diagrams or the charts that we're using or whatever, this is where it should be. We've gotten a lot of feedback about this, and a lot of folks folks just basically like the singular focus on the video. I mentioned Marco Kolanovic. It's in the podcast store on the Risk Reversal podcast that dropped today. You and I have Jeff Richards on the pod tomorrow. That'll drop on Thursday. He is a VC investor at Notable. He's been investing in a lot of these AI companies in the private markets. And then you and I have David Rosenberg of Rosenberg Research. We talked to him on Thursday. That would be Rosie. That drops on Friday. If you are not subscribed to our newsletter, go to riskreversal.com and you can get that there. Our main man, as we call him, CC Lagater, or just C-Dog, as you guys are going to start seeing him more and more. Guy will never use that expression, but I've been calling him that for 30 years. CC was an options trader extraordinaire. So he's writing some great stuff in the newsletter. It comes out every day after the close. Market Matrix. That's our daily wrap. That's our daily voice wrap. 10 top stories that our team curates. They put it into a AI model. They get a summary. We put it into a voice bot. That would be Brunson. You get a podcast in under 10 minutes of all the major stories of the day and a wrap of the markets. Guy, take a breath here, man. So all of that was housekeeping. So go do all of that, people, if you haven't done it already.
They took my camera away.
Are you frozen?
Well, it's funny you mentioned Wiz. I mean, at 11:42, being sitting here, that's what I'm about to do. I'm going to take one, but we'll be back tomorrow. Tomorrow is Wednesday. That means Butters will be not with us, but we'll have Butters work.
We will have,
and we're still waiting for news for Elizabeth Young Thomas. We have not forgotten about her. We will let you know when she has her son, and that's really it on my end as well.
All right, peeps. Thanks so much for being here. We will see you tomorrow, 11 a.m.